And join us right now with some more on the markets and some individual stock names. Stephanie Link, Hightower Chief Investment Strategist and a CNBC contributor. Good morning to you. We've been talking about some of the geopolitical issues this morning, some of the things coming out of the administration as well from over the weekend. And then we've also been talking about some of the earnings we're going to hear later this week. How are you positioning yourself in this particular moment?
Yeah, and it's great to be here, Andrew. I think that even though we took a breather last week in the markets, the economy is still chugging along. The Atlanta Fed tracker for the quarter is running at 5.8% for GDP. I don't think we're growing that fast, Andrew, but I do think we're accelerating from last quarter. And it is because of AI and the food chain. We heard from Cisco and Applied Materials and CoreWeave and Supermicro last week. So that's still working. And the consumer is still actually consuming. And I think you're going to get some really good reports, minus the housing cycle and stocks. But I think you're going to see very good numbers from Walmart and from Target, as you guys were just talking about. But when I listen to what the banks have said, they are talking about a very strong consumer, and that even the low end is starting to do a little bit better. They're lending at about 8 to 10% growth. That's very healthy. We have ISM services that are up 20 consecutive months in a row. Retail sales, if you average the last 2 months, because we did have the pull in from Prime Day at Amazon, you're running like 5 to 6%. So I feel good. Earnings are really growing rapidly. I don't think we're going to see 50% growth forever, but we are seeing a lot of momentum. I am encouraged with not only revenues growing double digits, but also gross margins expanding. And oh, by the way, we're on pace to do $4 trillion in M&A this year, which would be a new record.
So, it's funny. We constantly talk about all these big geopolitical headlines this morning, North Korea being one of them. We talk about wealth taxes in California. We talk about what's happening in the Middle East with Iran and oil prices. And yet things continue apace. Is there an argument to say that things are so strong that we just should look away from the other stuff?
Well, I think the fundamentals are really strong. And I think not only are earnings good, but they're very broad based. 10 out of 11 sectors saw growth this past quarter. 7 out of 11 saw double digit growth. So I don't think you want to fight the economic momentum. And I know, there are a lot of things to worry about in terms of all the things that you mentioned. It's never perfect. And I worry when I don't worry, because that means we're all complacent. But the underlying fundamentals are so strong. I think you want to continue to be fully invested. I think you want to be diversified. I love that we're broadening out and not just seeing it in technology. And I think we grind higher into the end of the year, because I think earnings may not grow at 50%, but they're still going to grow, I think, 20.
What do you think on the tech side? We were talking in the last hour about Berkshire Hathaway's investment in Alphabet. We're going to have Greg Brockman, who's one of the founders of OpenAI, on the broadcast at about 8:30 this morning. Obviously, we got into a whole, I don't know if you were watching a debate or interesting conversation about what's going on in the bond market as it relates to some of the financing for some of these data centers. But if you already owned, this is a big question for a lot of people who have owned the Magnificent Seven, do you stay in them?
Yeah. I like some of the Magnificent Seven. I think Amazon is the best position, because I think they can win in very, very many ways. Obviously, AWS, and seeing an acceleration to 38% growth from 27% growth the quarter before. That's really good. I think retail sales are running. The businesses are running about 9% comps. Margins are expanding. So I like Amazon. I do like some of the tech set, like some of the newer Mag 7s, if you want to call Micron in there. I've recently bought that, down 20% from its highs, with $100 billion of bookings between now and the end of the year. I recently bought NVIDIA for the first time. I've been a big fan of Broadcom, but NVIDIA is the cheapest it's been since 2019, and they're growing like gangbusters, like 85% revenue growth. Margins are 75%. They're going to double free cash flow. And I also bought SpaceX, and I have been buying SpaceX. I bought it during the IPO, and it's pulled back about 30%. They had a great quarter. And I think given the CapEx numbers are going higher, but the company talked about seeing monetization within a year. So I'm all right with them spending 65% growth in CapEx. So I think there's plenty to do in technology, but I also like other areas as well. Financials, industrials. We've talked about a lot of the food chain names in AI as well.